All right, guys, hope you had a great weekend. Just starting off with Palantir right now. So Palantir reports on Thursday this week, and they report before open, so keep that in mind as well, right? Looking at the chart, they have consolidated pretty nicely over the last, let's say since March. So what is that? That's March, April, May, June, July, August. So yeah, they've been consolidating for a while right now. And they're poised for a breakout. If you look, they're actually at the nearing the end of a wedge as well right now. So if you draw like a line across here, you can see that they're nearing the end of a wedge right now. So there should be a break either up or down in the next, let's say, 3 or 4 weeks. Obviously, earnings is a catalyst coming up this Thursday, and I expect either a pullback down to the 18 area again, although I doubt it's going to happen, because we saw heavy volume back there, nice buying and support right here, or an upside move to around 27 again in short order, right? Now, looking at the option chain, there are some interesting ideas you can use to trade it, especially using put ratios, because it's a cheaper stock. The exposure on the downside isn't that great, right? So looking at the option chain right now, we analyze out for Friday. The expected move on Palantir for Friday is about $2 in one direction. So looking at an upside move of like 24, downside move possibly of 20 or so. And if you add in the premiums at 20 and 24, you get another 50 cents or so in premium. So there's a potential move down to 1950 or up to 24.50. Obviously, it could be much greater than that, or it could be flat, right? As we've seen in the past few earning reports for many companies, they beat and they stay flat, or they even go down, right? But looking at Palantir for the week ahead, because of its low price, there are some interesting put ratio spreads you can use to play it if you want. Albeit trading it, for this week might be a bit harder. So going up perhaps 2 weeks might be more sensible, right? So looking at, for example, the 21-20 put ratio spread, it's not very wide, but you could go, for example, long 21, short 2 of the 20s, right? And then basically you have an overall credit here on the position, meaning that if it says above 21 come next Friday, you lose nothing at all, right? And if it goes under $20, you make $1 from nothing really, right? Obviously, the break even on the downside would be around 19-ish, right? Anything below 19, basically you're hoping to own it at that price, right? So a little bit of a hedge, pretty narrow overall. If you go out further in time, you can probably build a better one. So looking at September, for example, if you were to go with the 20 strike long, you could go short the 18 strike, but you'd incur a debit of about 15 cents. So not as interesting, because you're incurring a debit there, right? And basically you need to fall to 18 in order to make a profit over the next month or so, right? Given that the expected move is down to 20 or so on the downside, upside is 24. It's unlikely that it's going to push back down to 18, and if it does, it's probably a great deal to be had, right? So if it pulls it back down to 18-ish, then obviously that's a nice area to buy. But you want to look at risk mitigation strategies. I would say probably the best way to play it is wait till after the earning event. IV should die down, and then look at buying leaps if you're bullish on it longer term, right? As you saw on the chart, within about 3 weeks, that wedge should clear. We should see a pretty clear direction on upside or downside. Again, downside is not very high because obviously it's a pretty cheap stock. And even with a valuation of 35 billion, don't expect them to trade at a deep discount, because they are growing and they are a pretty promising tech company that should, in my eyes, over the next 5-10 years, compete with some of the biggest companies in the world, right? In the space, right? If you think about how Amazon, Google, and Microsoft have grown massively over the last roughly 10 years, it's all due to cloud, right? Google Cloud, Azure, and AWS, right? What is that commodity there that's important? It's data, right? Palantir makes data meaningful and actionable for corporations, right? right now they're big in government and private enterprise, but they're focusing on commercial side of things, right? So that's where you're going to see a lot of growth if they manage to get into there and grow rapidly. I mean, obviously the sky's the limit with Palantir, right? So again, looking at this coming week, if you want to trade it short term, which I don't recommend because obviously it's riskier, I would say, look at perhaps doing something like an iron butterfly or something like that, or a short iron butterfly where you, for example, go long the calls at the money and the puts at the money, and then you might go short, for example, out of the money, like $1 out of the money, 21 strike short, 23 strike short as well, right? Whoops, that's long, not short. There you go. And overall, the risk reward isn't very good because obviously you're risking like 85 cents to make 15 cents, but as long as it pushes, below 21 or above 23 by Friday, you win, right? So just, a small idea that, could pan out nicely. Otherwise, if you're bullish or bearish, given the high IV right now, you have to use spreads, right? So on the call side, long, for example, 22 at the money, and perhaps short 23 or 24, in which case, you have roughly 2-to-1 risk reward, which is pretty good overall. But again, trading short term, it's pretty binary. Last ER, they fell down to 18 or 1750 first thing in the morning, and they just recovered off the opening bell. They dipped down and they shot up. I think they shot up that week actually. Pull the chart again just to see it. So here's a chart again, looking at the weekly candles right here. We can see that for earnings, they were at a low of 1705 on May the 10th week, and they finished that week around 2030, right? So a nice recovery of about $3. So if you wait till after the event, it's possible you get a better buying opportunity, right? It's also possible that it pops, 25, 27, in which case, if you're not already in it, you may miss out on a buying opportunity as well, right? So someone was asking me last week about going long on Palantir before the earning event. And I said, well, why don't you go long half the shares you intend to buy before the event? This way, if it pops up, you're happy. If it drops back down, below 20, for example, you can buy the other half of the shares you wanted to buy anyway, and your average cost is much, much lower, right? So it's kind of win-win. It's a happy medium. Instead of buying before the event and risking it all, you can buy half before the event, wait for the event to occur. And then if it pops up, you win. If it goes down, you can buy more at a lower price, right? Assuming you still want to buy more. So just an interesting way to play it, right? There are a lot of other volatile names reporting this week. So tomorrow there's AMC reporting after close, 3D Systems, there's Chegg. Tuesday we have Cisco, Casper in the morning before market open. After close we have Fubo TV, Coinbase, Upstart, Unity, and then we have on Wednesday we have Wix in the morning first thing. So Wix is a competitor to Shopify. That should be pretty interesting overall. Canada Goose as well. After hours we have Neo, Clover, Open Door, eBay, Sonos, Bumble as well. And then on Thursday before open, obviously we have Palantir, which I just mentioned, Baidu, and then after close on Thursday we have Disney, Wish, Airbnb, Rocket Companies, Sofi as well. And then on Friday we have not very much on Friday actually. Yeah, there's not too much on Friday. Also DoorDash on Thursday as well, right? So Airbnb and DoorDash report on Thursday too. So we should see a lot of these names move pretty heavily this week. They are more volatile than the average stock. But looking at, for example, right now, I would say interesting plays would be had possibly on names like Neo or on Sofi. So Sofi I've been watching for a while. I mentioned them last week. Here's a chart on Sofi, right? So this is the weekly chart. I'm going to pull up the daily chart instead, right? So we had a nice green candle on Wednesday, and Friday we push up to near 17. Now we're trading not too far from 1 month highs right now. So you want to see kind of break above 1750 area, and then it has potential to push up to as high as around 21, right? Again, this is their first public report, so a lot of color will be added to their future based on their guidance, and that's what a lot of people want to see, right? So looking at the option chain for Sofi, put it up right over here. This coming week, IV is very high right now. And the expected move for Friday is about $1.70 in one direction from the current price. So upside of around 18.50, downside of around 15 or so. Support is pretty heavy at 15. Again, last week we tested 15 area, a lot of volume there, and we didn't dip below it. So I'm inclined to think we won't see below 15, but again, depends on what they have to say as per guidance in their report, right? Longer term, obviously, once the stock price, once the IV declines, you can go with leaps if you want, but given that it's a sub 20 buck stock, you might be better off just buying the stock itself and riding it higher, right? If it actually achieves the potential that people believe it has, myself included, it could trade around 50 bucks a share in the next year or so, at which point, if you own the stock, you can still cover calls on 100 share lots, right? Which is nice and very, very lucrative for those that have 100 shares or more, right? It's kind of like having a rental property that costs you, for example, for 100 shares right now, about $1,600 or so. And, if it goes to 50 bucks a share at that point in time, you can sell, 1 week out of the money call options, and you can pull in roughly, $100 a week or so, right? Maybe 200 bucks a week out of the money, right? Or if you go with a monthly OPEX, you can pull in maybe, 400 or 500 bucks a month out of the money on an asset that costs you about, 1,600 bucks, right? Not too much money at all. So not a bad idea. Again, I prefer to wait till after the earning events, as you guys know, and trade them after that, because obviously the IV dies down, you have all the information in hand. You occasionally get the rare occurrence where a company reports good information, beats on EPS, beats on revenues, raises guidance, and then the stock price falls, right? At which point you get a good opportunity to buy an asset that you believe in, that had good information come out on it, and at a cheaper price, right? Instead of gambling before the event, which is a much more binary outcome in that you're either going to win or lose, right? So Sofi and Palantir are the big ones I'm looking at this week. Obviously, there are a plethora of other names that you could look at as well. I know I was asked about Neo a lot last week. I'll cover maybe Neo and Disney and Airbnb, and then we can go into some Q&A. So looking at Neo for the week ahead, pull up Neo's chart. 1 second. Here's Neo. So 44 bucks a share. Again, trading between roughly 35 and 50 over the last few months. Hit a high of 65 a few times, double topped. And now we're looking at, a possible breakout to the upside or downside. Looking at the option chain now on Neo, which I'll pull up right now. Where did it go? Here it is. So we have an expected move on Neo for this coming Friday of about 4 bucks in one direction, right? So $4 up, which would take us to 48. $4 down would bring us to 40 bucks a share, right, by Friday. So about a 10% move roughly in one direction from the current price. But again, IV isn't that bad right now. It's roughly around the historical average, so not too high. But again, it is very binary overall. It might stay flat. It might go up, a lot more than expected, or down a lot more than expected. It really depends on what they report, right? Moving on to Airbnb, which is Airbnb, right? They're at 150 a share. I'll pull up the chart as well for a sec, so we can look at that too. Here's the chart. So they've been pretty volatile overall. They had a high of around 220 a share after they IPO'd, hit a low of 130 a share. One thing that people have been talking about, that I've noticed on message boards, is that a lot of the property prices in certain areas are up right now, much, much higher than they were last year. And given that Airbnb takes a percentage of the fee off the transaction, this might mean a beat, right? I'm inclined to think this is factored in because they're very overvalued right now as is. So looking at the option chain right now for Friday, we have high IV right now on the stock, obviously. And the expected move for this coming Friday is about 10 bucks in one direction. So upside of 160, downside of 140 per share, right? So again, pretty binary outcome if you're buying options. I expect that it'll probably move more than expected. So maybe up to 170 or down to 130. But if you're trading it, just be aware that the option chain isn't as liquid as other option chains, right? There are certain strikes that are more liquid, but overall not as liquid as well as, like, a Palantir, for example, or an Apple or SPY, right? So looking at the week ahead, if you're trading it short term, which I wouldn't do, you're probably gonna want to use spreads, call spreads or put spreads, because of the high IV, right? So keep that in mind. Some ideas, for example, could include going with a call spread, long 150, short 160. In this case, you're risking about $3.40 for a maximum profit of $6.60, right? So almost 2 to 1 risk reward. Put side, do the exact opposite, right? Long 150 put, short the 140 put, and you get almost the same kind of asymmetry of risk here, right? So roughly risk of 360 or so for upside of 660, or I'm sorry, of 640, right? But yeah, it's probably better just wait for the event to occur and then trade after. Again, they report Thursday after hours, right? The biggest name reporting this week is Disney, and I'll pull up their chart in a sec, right? So they had a nice little push off that 170 area, which has been heavy support over the last year or so. And they've been riding this line for the last few months, right? Since basically December of last year. So now it's been about 8 months or so, right? Last week, we touched a low point on Tuesday of 171, bounced up to 177. Nice recovery there. Now, depending on what they report, again, a lot of analysts will be focusing on the Disney Plus numbers, right? So their sub numbers and how they're growing will be very important. And obviously, theme park numbers will be important as well, given that the economies are open back up again, right? But looking at the option chain on Disney, they have an expected move for this coming Friday of approximately $7 in one direction. So from the current price, upside 184.50, downside would be roughly 170 or so, which is support as well, right? Again, I wouldn't trade the short-term contracts. I would go longer term if you're more bullish. Given where it's at right now, 177, it's still pretty cheap in my eyes. I think the average analyst price target right now is around, one second, let me find it. So the average price target on Disney right now is 207.50. So upside of about roughly 25%, which is not anything to scoff at. And if you're going to trade it, I would say wait till after earnings. If it's flat or down, you might want to look at buying options that are a year out or so, past January, maybe into June of next year, because obviously there could be more COVID scares in the fall as we get new variants, new waves and whatnot. I mean, we've seen how it goes already, so it wouldn't surprise me at all to see us have lockdowns in certain areas again, like California, Florida. I don't think a lockdown, but who knows. So obviously, you want to be more cautious in your trading. Looking at the broad market right now as well, we'll just go over that fast. So SPY, Qs, and Russell had a decent week last week. SPY at all-time highs. The job numbers on Friday were better than expected, albeit they were roughly in line with what a lot of economists expected, right? Because a lot of people were whispering numbers that were higher than expected. And also the private payrolls via ADP last week were much worse than expected, right? I think we came in at 330,000 jobs for private payrolls versus expected of I think it was like 660 or something like that. So SPY this week, let me pull up the chart first. So we are a bit overextended, but at the same time, we have no resistance ahead because we're at all-time highs as of Friday, right? And we have inflation numbers coming out this week as well, right? So let me pull up that information one sec, just so you guys know which day it is. I believe it's Wednesday, if I'm not mistaken. All right. So yeah, it's let's see, Wednesday this coming week. Yeah, Wednesday morning, 8:30 a.m. Core CPI numbers, right? That'll be a big event to watch because obviously, if they're higher than expected, that may mean that the Fed will have to act sooner than expected as well, right? So a lot of people are worried about the Fed tapering early, which is probably going to happen. There's talk right now that Mexico is going to be raising rates pretty soon as well. So if you see government bodies globally raising rates, then eventually the U.S. will have to follow suit, and that won't be good for the markets, right? So you want to keep an eye on that data Wednesday morning, 8:30 a.m. Be ready for that information, right? Otherwise, we have NFIB, small business index on Tuesday, and productivity as well. Thursday, we have jobless claims as well as usual. And then Friday, we have import price index, nothing crazy. Wednesday is the key data you want to look at. The previous was 0.9% for July. So you want to look at, for June. So you want to look at the July numbers coming out on Wednesday morning, right? Looking at SPY now, the option chain. If you're trading it to the downside, again, you need to be careful because right now we have no resistance above and close at all-time highs on Friday. So you want to be cautious trading downside. I would say if you want to hedge your portfolios, it might be better to raise more cash, lighten up on positions that you're up on right now than buying put options, as put options is essentially buying insurance, and that can be a way of throwing away money if it's not used at all, right? So it's hard to time a pullback in the market. So if you're looking at timing a dip, I mean, good luck to you, right? It's very, very hard to do. That being said, if you want to play with downside protection, again, I would say the put ratio spreads are the best things to use, especially given that right now there are no real big catalysts to the downside over the next few weeks. Although I do see by October us having a minor correction of about 10% or so, right? That's my own opinion, obviously, just my gut feeling. So take it for what it's worth. But looking at the August 20th contracts, for example, you go long the out of the money. So for example, the 435 puts, and then you go short 2 of the 425 puts if you wanted to. This is for 2 weeks out, so pretty short-term trade. The cost here is about 17 cents, and the upside here would be $10 minus 17 cents, so $9.83, right? And obviously your second break even would be down at 415, in which case you would lose about 17 cents. So the risk reward is pretty good overall. I would say that you want to trade put ratio spreads, but make sure you understand what you're actually doing with put ratio spreads before you actually take the position, because there is risk of the downside in the event that we have a big correction of like 10% in a week or so. That could burn you pretty hard, right? Just be aware. If you have any questions about this at all, just hit me up via DMs or post in chat. Happy to respond, obviously, as always. And I'll end the video here for some Q&A. So have an awesome week, guys.